Good morning. It's Wednesday, February 26th, about 6 a.m. Central Time. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's get you ready for the trading day ahead. Let's look at precious metals, futures, and the commodity market. So, looking at the precious metals overnight, futures are higher. It's fueled by the surge, really, in the copper market. Also, a lot of bargain hunters coming into the gold and silver market. Looking at the overnight ranges for April gold, we do have it trading at $29.27, up about $8.30. So, the overnight highs, $29.42. That's about $40 lower than the previous day's highs. And then if you look at the lows, $29.18, about $20 lower than the previous day's lows. So you can see this is a setback in the market here overnight, a lower high to say if you're going to look at the technical analysis. Now, March silver, any new positions you put on, you really want to establish in May. You only got a day left here on the March silver contract. We're going to be contacting our clients. We're going to be rolling over those positions from March into the May contract. Now looking at the overnight highs, 29. That was the December double bottom. Looking at the overnight highs here, 32.26. So that's about 50 cents lower than the previous day's high. And then if you look at the lows, 31.96, so dropping below that 32 mark briefly, trading at 32.03 last on the March silver. So we're just over the overnight lows here. Nothing too significant. Small gap up on the charts, up about 0.6 of a basis point. Really, these markets are following that copper market. Copper surging up 3.5% right now, trading at 468. That's a 16-cent move. That's quite a large move. Remember, when you're trading copper, there is also the micro copper contract. So when that goes from 468 to 469, that's a $25 move in your account. We dropped down 1 penny, that's a $25 reduction in your account. So pure price plays on copper. I really like that micro contract. So looking at the gold silver ratio, getting back to that, we're at 91 to 1. We did hit about 92 to 1 yesterday when things really got ugly here. It was a broadening of the sell-off across many different asset classes, everything from Bitcoin, energies, US equities, metals. Everything was kind of selling off here yesterday. So looking at the data here overnight, this is at about 6 a.m. on the dot right now. S&P futures, they are up 25 points at 59.95, recapturing the 6,000 mark. Your NASDAQ's up 137 at 21,285. Dow's up 111. 43,806, and the Russell up 6 at 2182. Pushing onto the currency markets, the dollar index is pushing up just a bit, 106.45. All the other foreign currencies all in the red here, being weighed in a bit lower here. Looking at the cryptocurrencies, they are coming off of those low levels yesterday. Massive selling. It was really a risk-off, de-risking environment here, and traders are really sour from the hacking news from Bybit, and you're seeing that people are just wanting to deploy cash elsewhere. You look at how cryptocurrencies have held up recently, they've kind of been stagnant in nature. They haven't really had that 1-2 punch and that firepower back up. But remember, the cure for lower prices is lower prices, and we're starting to see some traders come in and start to buy that dip in the market. Looking at the bond market here, we are seeing 10-year treasury yields. They are coming back a bit here after reaching the lowest level in 2025, sitting at about 4.31%, and your 30-year is unchanged at the moment here. Now looking at the grain markets, all just a bit softer as well. So there's your rundown on all the data that's coming out here. Now focusing on some of the headlines, the stories, and the major key events, and looking back at the U.S. equity market. So global shares, they are rising ahead of a key earnings report out of NVIDIA. That's one you're going to want to watch here after the bell. That's going to be a big-time market mover. Now NVIDIA could determine Wall Street's next direction in the market, and especially for the tech sector and also the NASDAQ. You see in European equities, they did gain on resources and mining companies. With the stock 600, they'd hit a new all-time record high. Now, Trump did order the door, and this is where your turnaround in the metals occur, for a levy on copper with a tariff probe here. So President Trump has signed an executive order directing the Commerce Department to examine possible tariffs on copper. The investigation will be carried out under Section 232 of the Trade Expansion Act, which gives the president broad authority to impose trade restrictions and domestic security grounds. So copper futures in New York, they surged 5% here yesterday and was the biggest intraday gain since May of last year. Now we're seeing gold steady here. After that record-breaking run, people did take some profits here yesterday. Gold traded near about 29.27, and it's really supported here because of copper and things like that. We're seeing that exchange traded funds, they saw their largest net inflow since 2022 last week, and that's what's really kind of holding firm on a lot of these metals markets. So the focus is going to be on that core PCE and the direction of monetary policy. Looking at the ETF buys and sells on the gold market and silver. Well, exchange traded funds, they did cut about 4,600 ounces of gold here yesterday in the last session. That brings that, your net purchases to 2.3 million ounces. So the ETFs, where people deployed money in the metals markets yesterday, if they didn't jump into the copper market after that story, well, they went back into the silver market. They were buying the dip. So ETFs added 9.2 million ounces of silver in their last trading session, bringing this year's net sales to 3.15 million ounces, and the biggest one-day increase in September 24, 2024. Now, one other headline that I'm watching here is the oil market. Crude oil prices did break into the 60s here. A lot of people are looking at the May and the June contract for longer term positioning here. It's really some concerns about the energy demand and just that risk off appetite that we've seen. Crude oil's lost about 5% since the start of February, and it's really like some anxiety, some concerns about consumption in China, and then also the question is he going to have a hard stance on Iran? What are the OPEC? What is their production levels going to be? Are they going to continue to push out those production hike increases? You have a mix of a push and pull type of thing. So a lot of just uncertainty as far as output and also demand. Key events here to watch here, and I think this is quite important. We do have U.S. new home sales here today, as well as NVIDIA earnings. You'll have Fed's Raphael Bostic. He's going to speak on Wednesday. Get into a couple key levels on the gold market. I really think that psychological level, 2,900. First main level of support, 2,872 below that. Sticking with the May silver, not the March. It's going to be 3,180, your first level of support. Below that, it's going to be 3,125. We don't want to see that break below 3,130 because it could open up another volatility event. And I told you yesterday, when the VIX gets to a certain level here, it causes it to be the chop bucket, the non-investable bucket. And that's where you get people getting chopped up left and right. That's why I recommend those mini and micro contracts. Your first level resistance on the gold market, 29.48, then 29.67. Your support or your resistance level on the silver market for May, 32.68 and 33.01. Looking at the other technicals here, we did have silver break to more of a neutral trend here, but I think with the ETF flows coming back into the market, you could see these bargain hunters support this market and prevent it from going into bearish trend. Bearish trend would be a close below 31.46. Market's got to get back above 33.61 and to really get that silver squeeze going back onto the upside. And then you look at the gold market. Yes, a big sell-off, but we've seen these big sell-offs only last 1 to 2 days, followed by a reversal and a rally going back up. As long as we have the central bank buying, as long as we have that appetite for people to go into the stagflation play and not necessarily the deflation play, which is what the market has reflected on Friday, on yesterday's trading, on Monday's trading. It looks more into a deflation where all assets come off here quite a bit, and it's really just a sour note for many different asset classes. So you got any questions, you give me a call. We're going to make it so this video eventually, you're just going to log in a Blue Line Futures website and it'll be there. We're not really going to post it out to the public too much longer here, so it won't be going necessarily on the YouTube market. But got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.